In the meantime, though, lots of red arrows in Europe and in Asia overnight. Many European countries already looking to impose travel bans on people coming from a number of African countries. Karen Cho joins us right now live from London. And Karen, this is a pretty quick reaction as well to something that we are just learning about.
Becky, happy Thanksgiving to you and to Andrew. It's not the type of Friday we had anticipated here in Europe or across in Asia. I've got to say, many traders on this side of the world were hoping for a fairly quiet Friday, with the US having a fairly shortened trading period. But what we've got first up across the Asian markets, selling. And don't forget, a number of the central banks in the region had already started to move towards exit. South Korea, New Zealand. So it does beg the question whether that was just too early, too preemptive a move at this stage, if we are still dealing with the variant in this pandemic. So markets selling off. China, a little bit of an exception, more contained, you've got to say, as you look at that percentage fall. But they have had a zero tolerance approach to COVID anyway, so not much may change on the back of this variant. I want to take you to Europe because this is where we have seen a lot of the pain across the course of the early trade. Straight up, a knee-jerk reaction. And it does set the scene for the US later on today. We saw selling coming into the mix, particularly for the areas of the market that have been trading in much better fashion. For instance, French stocks have been one of the outperformers so far of late. That market coming off the most out of the core markets, down 3.2%. So we're putting distance between the recent record highs we experienced on European markets. Already earlier this week, we had a wobble around rising COVID cases in Europe. But this story just adding an extra leg to the downside. Other markets you can see hard hit. The Spanish market, the IBEX down 3.7%. I want to take you to the German Bund, because as we started to talk about this narrative of a faster taper in the States potentially and a rate hike on the horizon next year, we started to think about that in Europe as well, to the point where some market participants were saying, will we see a move on the deposit rate by the end of next year? That had been quite monumental for some of the yields, particularly the core German bonds. But you can see we've moved deeper negative now. We are minus 0.31 as this flight to safety has moved into global bond markets. I want to take you to the sectors. We are seeing a very similar pattern to what you're seeing ahead of pre-market in the States. We have got selling in banks around that yield story. Markets are just reassessing what they thought around that margin expansion story. Banks are down 4.8%. Fighting it out really has been this travel and leisure sector, down heavily, and particularly at the start of this trading session. One of the worst performances was in IAG. There in British Airways, it was down to a fairly mighty 20% from the outset. It claimed back some of that and was down roughly about 10%. Oil and gas too, and you think about what a significant week it has been to tap strategic petroleum reserves around fears of this escalating oil price. Now we've got very genuine concerns around the demand outlook. So we've got a 4.5% pullback in energy stocks here, very similar to what you're seeing on the spot price with Brent and WTI. Better performance healthcare. It does tell you again about the refocusing around those pharmaceutical names. So it is a very challenging session here. I would say, though, delivery stocks, remote working stocks and gold are in favor today. Becky, Andrew, back to you.